I'm so happy to have you all with us. This marks what we call the sort of book into a year-long segment of working with entrepreneurs, particularly in New Orleans, around how to help them help their small businesses become more tech-enabled. And with the sort of unfortunate series of events with the pandemic, the good thing is we've been able to share this content more broadly. And we wanted to sort of make our last conversation virtual. So I'm so happy that you're here with us. We're going to hear from some great speakers today, but more importantly, I hope you receive information to help you think about during this season and in the future how to help your business become more tech-enabled. So first, I'm so happy to have with us Kate Costa. Hi, Kate. Kate is Vice President of Global Philanthropy with JP Morgan, and we're going to talk a little bit today about why JP Morgan thought this initiative made sense, and also what are some of the current priorities or maybe shifts in priorities due to the pandemic. So good morning, Kate.
Good morning. Thank you for having me. I would rather do this than cartoons and cereal any day, so appreciate the invitation.
Good. Thank you for being here. Well, quickly, when you see tons of initiatives that come across your desk, and most of them I'm certain are very good, but why did you all think it was important to sort of invest in helping small businesses become more tech-enabled, or at least elevate the conversation? Why was that important to you?
Absolutely. So I think I'll quickly give a little bit of background about where I sit and the type of work that we do, so then I'm better able to answer that question. So I sit within the philanthropy team at JP Morgan Chase. Collectively, we donate about $350 million a year in various types of philanthropic investments. And the vast majority of that is focused on what we call our 4 pillars. So these are sort of key areas where not only do we feel like there's a lot of work that needs to be done in order to make the world the type of place where we all want to live, but also where we have a particular set of expertise. So we think that we can be helpful in that area. So those 4 areas are small business expansion, financial health, workforce development, and neighborhood development. And I lead our small business grant making. So I know I'm taking a lot of time, but it's
okay. No, this is good. Go right ahead.
When we think about small business, again, we work across these 4 pillar areas, and the ultimate goal with all of it is to decrease and ultimately eliminate the wealth divide. In the U.S., we're particularly concerned with racial wealth divide. And so we look at small business as a way of tackling that. And there are a few things that all small businesses need, but certain small business owners have a harder time accessing because of the systemic disparities and historical discrimination that's happened. And so kind of bubbling those down into 4 things. It's access to capital, right? People need money to be able to grow their business. It's access to customers. You got to have someone to sell to. And it's access to management education. Right? As you're growing your business, you need to know how to manage the company. A lot of entrepreneurs are really good at whatever it is they offer, but they don't necessarily have the experience in building the company. And when we think about trying to connect all of those pieces, one component that kind of can help with access is access to network. And so we do all of this in a way to help businesses grow and be sustainable. And so tech, obviously, is something that helps with all of those components. It makes access to customers easier. It makes managing your finances easier. It makes managing the business overall more efficient so you can be more profitable. And so that's something that we were certainly trying to incorporate into all of our work. But the reason we were so interested in your proposal, Crystal, when you came, is, well, there were many reasons, but I'll highlight 2. So the first was that component of, I think your actual title was tech as a tool for sustainability, right? So not tech for tech's sake. It's not, here's this cool new gadget, let's fit it in. It was, this is something that's going to help your business be sustainable for the long haul. If we figure out how to be adaptable, then we can be adaptable no matter what gets thrown at us. We didn't quite realize there was going to be this big of a curveball thrown at us during the course of it. But we loved that component. The other thing we do with our philanthropy is we have folks that are sort of subject matter experts, myself, one of those pillars, but we also have team members that are based in the communities that we're serving, because we think it's really important to understand what's happening on the ground combined with the best practices to create something that works for a community. And so the other thing that really jumped out at us with your proposal, Crystal, was that you were very much focused on both the local community. So what does New Orleans need? What are the specifics here? How do we build a community within this small group of entrepreneurs? And then how do we connect them to the bigger network that go beyond New Orleans? Because that's how they can be integrated into those broader networks that allow access to all of those resources that we were trying to tackle.
Awesome. That's exactly right. Well, I'm happy that those things stood out. And, I almost feel like it was sort of like a precursor to this moment, right? So, how has this pandemic shifted the priorities at JP Morgan, if at all?
Yeah. So I will say any crisis, right, brings to the surface and exacerbates existing issues. So I would not say that we have completely done a 180, changed our strategy at all, right? Those 4 things that businesses need are still the things that businesses need. Mm-hmm. What we're looking at here, though, is sort of what are we doing in this moment to be responsive to the moment and kind of change how we think about tackling access to those resources right now. So that means a few things for us. The first is we're very interested in businesses that are interested in growing. But we know right now people are trying to survive, right? So we're still interested in those same types of businesses. We still believe that the growth is going to happen, but the growth might not happen this year. So we're spending a lot of time figuring out, do we need to do things differently because we're talking about stabilization versus immediate growth? And so that we're setting up for future growth. One of the other things that has sort of, again, bubbled to the surface with this crisis, and both the combination of COVID and the way it is impacting different communities differently, and then also the murder of George Floyd and the many other murders, and the unrest that has come out of that, there is an increased willingness, I think, on the part of some of our partners and other stakeholders to be more explicit about exactly what we're trying to tackle and for whom. So, anyone who's worked in this space for a while, Crystal, I'm sure you've seen the evolution over the years. We're talking about underrepresented entrepreneurs. We're talking about entrepreneurs of color. There's much more of a willingness right now to say, we're talking about Black entrepreneurs. Yeah. Like, this is who we need to focus on.
Listen, right?
Right, exactly, which is really helpful because then it allows for digging into more of that disaggregated data and getting down to, okay, so what specifically, if we're going to talk about not just growth businesses generally, but stabilization for businesses that could grow. And we're talking about Black entrepreneurs. What are the specific interventions that can help? That's been really, I think, driving sort of a tweak in our conversations versus an overarching change. And then the other thing that I would say is digital inclusion. It has been something that we have felt was important to weave into all of our work across the board. Now it is very much not talked about as a nice to have, but a must have. We need businesses to be able to be included in the digital economy. They're not going to be competitive, whether we're talking right now and trying to survive or in the future when we're getting back to whatever normal is.
Absolutely. Oh, great. No, I think that's super helpful. And I like the fact that now we can have very explicit conversations about Black entrepreneurs specifically. Thank you for that. So tell me, what are some of the bright spots, though, in all of this, right? All of us, we're trying to find like the light at the end of this tunnel. What are some of the bright spots, Kate, for entrepreneurs right now that you're seeing?
Well, I would say there are a few, and one is what we already talked about. Like, there's much more of a willingness to talk about things head on. And I think as part of that conversation, there has been a little bit more of a willingness to discuss the systemic nature of these issues, right? So when you look at what's happening with COVID and with the unrest, you really can't have a conversation about just entrepreneurs or just workforce development or just neighborhood development, because it is so in your face obvious that all of these things are really connected together. And that helps with that conversation about this is systemic, which then helps us have sort of these deeper conversations about we're going to need more than technical assistance, right? This isn't just let's teach a class and move on. It's how do we change the system? And that conversation being primary as opposed to like in some of our sort of circles of people that do this all day, every day, I think is really exciting. One of the other things is, I mean, there has been a renewed attention on the importance of small businesses to the economy. In a way, I mean, let's be honest, it's an election year. We would have been talking about small businesses anyway, but we would have been talking about them in a very different way. And this is, again, it's a crisis. So it has made the focus on small business, pulled it away from a nice to have to a need to have. We must make sure our small businesses survive and thrive, or we will not survive and thrive. Whereas I think in previous, it's been like, we really should be talking about these businesses. It would be a good thing to talk about these businesses. And now we have to. We need to figure this out, and we need to figure it out now.
Awesome. So in closing, I know sometimes there are things you can't share, right? But if there's anything you can share that's new on the horizon for JP Morgan or where you sit, we'd love to hear about it. Like just a sneak peek.
So you're right. There's not a ton I can share, but I will say one of the other things that I think has been exciting, which I sort of alluded to, is much like a sort of more urgent commitment to figuring out how all of these pieces come together. And so we've been doing a lot of this work from the philanthropy side of the house for years and years. Our business obviously serves tons and tons of small business customers. What's been really exciting to me that was happening before COVID happened, I don't mean to imply that it wasn't, but that there's been sort of a renewed urgency around is figuring out how to make sure the right hand and the left hand are very much intertwined. So if we want to change that system, we need our philanthropy and our business to both be attacking this and attacking it strategically together. And we've really had a lot of renewed energy in approaching it that way. So I'm really excited for some of the things that I'm not going to tell you now, but you'll start to hear about over the next few months.
Looking forward to hearing it. Again, Kate, thank you so much for walking this journey with me. But more importantly, here's a thank you from all of the entrepreneurs that you all have supported through this. We're so happy that there was flexibility, and now we've been able to even grant different tech tools to some of these small businesses in New Orleans, and the impact has been tremendous. They are being sustained, and they're hopeful about the future. So thank you so much for joining us this morning. We so appreciate your support. Thank you.
Thank you for doing the great work, and thank you for having me.
Have a good day. Bye-bye. Wow. Well, next up, we will hear from, I call her a shero in the world of tech. She and her co-founders launched an organization called Black Women Talk Tech. And we have with us today, Miss Isosa Igodoro. Isosa, are you here?
I am. Hello. Hi.
Thank you. And so I told Kate, this is the adult version of cartoons and cereal, right? We're up early on a Saturday morning. I was trying to think of a nice way to make this sort of exciting and cozy. But I'm so happy you joined. And I want to say publicly, thank you for being so supportive of the work that we've been trying to do here at Head and Heart and Mosaic Genius. I mean, you jumped right in and you rolled up your sleeves, and I'm so grateful for you. And I wanted to acknowledge that publicly. Let's start here. Why did you start this organization? I think it's important to have an organization like this, right? Well, not right now, but when you started. But I think right now we really see why it's important. But when you started it, why did you think it was important?
So first of all, thank you so much for having me here and allowing me to talk a little bit about Black Women Talk Tech and what we started and why we started it. It's really a pleasure to be here, even on a Saturday morning. So I'm excited just to share more about what we've been doing over the last 4.5 years when building this organization. So for those of you who don't know, Black Women Talk Tech is the largest and leading organization of Black women tech founders globally. We lead this mission to help acknowledge, identify, and help resource the next billion-dollar tech founder to be a Black woman. And we really think it's super important. Myself, Regina Gwen, and Lauren Washington started this organization because we saw a gap in our community being able to come together, find a safe space to talk through any challenges we're having, and really talk about how do we build real, disruptive, economic, advanced businesses for ourselves and our community. Because it's super important to know that, when you see all these different advancements in the world is coming from technology. And we want to show there are different leaders in technology building and creating those innovations as well, especially Black women. And I know I used to always hear when I was growing up is like, if you need something done, give it to a Black woman. Or if you're really wanting to see what's cooking up, definitely the culture ad has definitely come from our communities. And so we're really pretty open about how do we continue to serve and support with resources, not only just connection to financial support, but the education, the social capital, the ways of building community to be able to better serve Black women. And so it was super important for us because we ourselves are founders and we're building our own technology tech companies, right? And scalable that makes life more efficient, easier, faster in any ways that we see it in those industries. And I think it was really clear for us in our first meeting when we created our annual conference, Roadmap to Billions, that we really show an opportunity for Black women to see themselves in those lights. And so that's why we kind of created to really be able to really better serve folks.
So yeah, representation matters even, at every level. So I think that's super important. Representation matters, community matters. And speaking of community, we know in tech, oftentimes, Black women are the only ones in most spaces. Tell us a little bit about your journey in this field. What has it been like? How did you end up here? Did you always know you wanted to be in tech? And I think these are important things for people to hear as our world becomes more tech friendly, right?
Exactly.
So tell us a little bit about your journey.
So my journey was, I don't think incredibly unique. I started out in banking. So I worked for Citigroup for about 7 years. And then I saw everyone on their phones playing these digital games. And I got really interested in what are people doing, right? And I'm from New York and I would see people play Temple Run. This is dated and all these different games a long time ago. And I was really interested in figuring out what that was. And I'm a non-technical founder, and many people who come into the space may not have a technical background, but it was super important when building a technology company. That's the crust of it, is either finding someone who's technical or at least having support in that way that you solve for that in your team. And so it was super important for me coming from banking and transitioning into the technology world was for a lack of a better term, a lot of learning, a huge learning curve because everything is so different. The speech, all the talks, the different phrases, how to kind of this whole idea of building something and making sure you iterate quickly or failing forward, this whole idea of failing fast and making sure that whenever you find something and you fail at it, take the lesson in it and run with it and allow that to help you build your business better. And so those things I was really used to when coming into tech, especially because in banking, it's you don't want to fail. Failing means that means bank issues, right? And so we really prided ourselves really on the opposite side, right? And so building myself with kind of treasure chests of resources to better understand the world of technology really helped. So I would go to conferences, I would read online from different blogs and resources that are talking about tech. Wasn't as many as there are now, because I started in 2012. Now it's like incredible, the amount of resources and availability. I mean, I definitely wish Black Women Talk Tech started when I was there, when I was just beginning to make it a lot easier for process. But it's really incredible just to see how easy it is for folks to like get into it and digest it and be able to create something special that of a group of people who really need your product or service. And I found my transition being learning more about learning how to run a business than the technical chap, right? Like that you can kind of solve for. You can solve for by hiring a right technical team or talent, but running and managing people, running a business for the first time as a first-time founder was a challenge. I think many of our founders found that raising money was a really big challenge for Black women, and including me. And I was one of the fortunate ones that I was able to raise for my first startup around 1.4 million. But most people don't have that, are not that fortunate. And it's been a challenge because the average Black woman actually raises on average under 50K for their companies. And in comparison to 1.1, the average white male founder raises. And so when we see those type of numbers and see it as you're working, sometimes it can be discouraging, but we see the grace, the resilience of Black people, and especially Black women when building companies. So we're built for this. It's in our DNA to build incredible businesses that go past the test of time. So we're excited to be here as Black Women Talk Tech to kind of help support and shape that. And so I actually, in building my business, I felt so alone in entrepreneurship that when I met these other women at another event randomly, which was my co-founders now, Regina and Lauren, on the lunch line, we were like, hey, what are you building? Because we were often the only chocolate drops in the room, like we used to say, because wasn't a lot of diversity in technology back then. Also, it wasn't also openly talked about like it is now. So it's really a way forward, and we're really excited to be a part of that story.
I like how you talked about failing forward and a learning curve, because what I'm finding with some of the entrepreneurs that I work with in New Orleans in particular, I would say, let's explore this technology together, right? Because it's almost like starting a new business. Yeah. If you're integrating tech into an old business. And I think in the Black community, I thought it was so important to do this. As I witnessed so many Black businesses sort of fall behind the curve in terms of being tech enabled. And I kept thinking, if they don't get up to speed with this technology, this is going to be problematic for the sustainability of their business, even if you have a great business, right? So when you talk about failing forward and sort of experimenting, what sort of gave you, what I'm trying to get to here is, what gave you sort of like the insight or courage to kind of keep trying it? Because what people need to know about tech is it's constantly evolving. Yes. Right? So can we talk just a little bit about that? Because I think entrepreneurs that are in that space of thinking about, okay, how do I become more tech enabled? What can I do? Well, can you talk just a little bit about that? The constant evolution of tech?
Yeah. And so I think I would attribute the changes and many ways of how people are constantly wanting to change their business and really not only just beat the competition, they want to dominate, right? There's this culture in technology about dominating. And some of that means that you constantly are testing different things in your business that's going to give you the cutting edge. And so that means you're constantly saying, okay, you're constantly breaking things and trying it again and making sure, hey, does this work better? But a lot of it is guesswork. And, no one has a magic ball and saying, hey, this is the way to go. And some people are, they get it right in the first time and they're like, oh, okay, that's interesting. I have a vision of what it should look like, and that should always stay. But that can evolve with the customer base, right? That can evolve with the changes of the time. And that allows people to really be able to not only test the hypothesis, but also find ways to grow their business and scale it to allow other groups to actually leverage their goods or services, right? And I think the culture of technology really lends itself to that. And it made it okay to test around. So for example, when you're starting your own business as a technology founder, you really do not at all want to wait till it's like perfect. If it's not an ugly baby by the time you throw it out there, you waited too long, right? And so it's this whole idea of like testing and saying, hey, is this working? And then constantly testing so that you make the best solution for your customer and your customer first, right? And then you find ways to transcend or grow to another market, or testing ways to partner with others to, grow to a different demographic, right? And so I think it's this kind of ecosystem or community of like just breaking things. And so that is what I would encourage other folks to like consider and see, how other people are doing this. Because there's a lot of now off the shelf technologies that can allow businesses to go from 10xing their business really quickly. And it's not going to take the year or two of development. It will take a few weeks, some of these technologies that are off the shelf. So it's just testing it. Even if you test it with a small group and see how it goes, that's a great idea in terms of what we call a beta, which is just a small group, like almost like a focus group testing a product idea. It would allow you to do that easily. And so I would encourage folks to do that and constantly, testing so you can grow.
Good. I wanted to get that in because I don't want people to feel discouraged that if the first thing does not work or is as effective, know that there are other tools that they can constantly go back and try.
Yes.
Now, how do you think the pandemic, the social unrest, Breonna Taylor's murderers are still walking free? How has all of this, do you think, impacted the tech ecosystem at all?
I think it's definitely had a huge impact in terms of paying attention and having the focus be on Black people. And I think at the very least, it shows the resilience of Black people for sure. Going through this triple pandemic, as we'd like to say here at Black Women Talk Tech, because first you had to, deal with the health being focused on Black people really being affected by COVID-19 the most. And then when you think about business and economics, right, it's 40% is expected of Black businesses to close during the during the pandemic. And then lastly, the social unrest has been incredibly like one of those things that's just so tolling on your spirit that you're just wondering how you didn't know you had it in you, right? And so I think the resilience of Black people have definitely been shown in these times. And when the effects of and how it impacted the tech community, I think is, getting people to stand up and show their support of Black businesses and of Black founders. And some of them, waved the flag and said, hey, I'm with you and I'm going to do whatever I can, whether it's sharing my time, sharing my resources, giving money to causes that are helping with the pandemic. But I think moreover, I think more still has to be done, right? So, because I think being a person of color and being a person in the Black community, it was great to say Black, right? We're often we're often kind of put into this group of people of color. And people of color does not mean Black, right? That's your percentage of all these different things you're sharing. And so I think it's super important to have the focus on Black founders and Black people as a whole. And I think that's something that I haven't seen before. And it feels different in terms of how things are going to be more equitable in the future. So it's a real great kind of thought and process to help to see how the community is going to pour in and really help solve some of the equity gaps in our communities and help solve how do we get there together.
Yeah, that's good. That's good. And then the last question is, what advice would you give an entrepreneur exploring the world of tech? I'm an entrepreneur, and I've heard Kate talk earlier about what's important in her world, and I've been observing, and I'll just say this: it seems like companies that were already tech enabled had an advantage when the pandemic happened, right?
Mm-hmm.
But what advice would you give entrepreneurs from where you sit, exploring this world, of possibly becoming more tech enabled or creating a tech company?
I definitely say go ahead and just jump full force ahead, because I think what people don't realize, technology is one of the greatest, I think, wealth equalizers that exist. If you are able to build in a space where your business can create value of making things more efficient, quicker, and be able to get more access to your business. And so I think it's super important for folks to really find the resources through, whether it's Black Women Talk Tech and emailing us, or the different blogs or resources that exist out there today to help better serve your company to be able to expand past what you're doing today. And I think once you just start, you won't be disappointed, because I think it will literally it has really saved a lot of businesses if they actually put technology within their businesses to help enable and push. A lot of restaurants being able to be on, Uber Eats or creating their own version of that has really supported even local communities to be able to actually survive. So I think go full force ahead. And if you need a starting point or resources, definitely we're here.
Awesome. Well, I'm so happy that you are here. And I'm so excited that you've decided to set the goal of helping create a Black female billionaire in tech, right? I tell people all the time, people often ask me, because my work sits at the intersection of wealth building and tech. And oftentimes they ask me, oftentimes they'll ask me, how can I be more impactful? And I'll say, you can be more impactful when you make more money, and then you can change systems. And so I'm so happy that you set that as a goal. And so I think that's great. Thank you so much, Isosa, again, for joining us. It's been a pleasure, and I hope you'll stick around for a little while longer. But we look forward to partnering with you in the future on some really great projects to help entrepreneurs that are becoming more tech enabled and tech companies that already exist. Thank you so much.
Thank you so much for having me. Bye.
Bye. And next up, we have Dawn Dixon. I call Dawn the queen of crowdfunding, and I've been a quiet fan of her work for a while. Dawn, are you here?
Yeah, good morning.
Good morning. So I'm going to let you take over, because you're about to offer a great workshop that I know folks are happy to hear from and learn. So I hope you brought your pen and pad, everyone, to learn this morning from the genius of Miss Dawn Dixon. It's all yours.
Can I ask that everyone turn your cameras off? I'm going to put some slides on the screen. If everyone could kindly turn their camera off. Good morning. I really appreciate you all joining today. I'm going to talk about crowdfunding. I'm going to share my slides, and then I will have some time for Q&A. So let me get to it.
Great, thank you.
Oh, can you enable screen sharing for me, please?
Okay, I think the guys running, the tech guys running, let's see. I don't want to mess up anything. Can you all enable screen?
If you're the host, you can go to share screen, click on that, and then allow it for everyone. Okay, thank you.
You did it?
Whoever did that, thanks a lot.
He's the host. Yeah, I'm not. I'm not
Okay. Okay, great. So again, just welcome. I'm going to be talking about the art and science of crowdfunding, and I'm Dawn Dixon. I'm the founder and CEO of PopCom, but I consider myself to be a serial founder and an inventor. Shameless plug, please engage with me, follow along on my social channels. I publish a lot of great content on this topic, and as well as just a lot of back and forth about many topics that are relevant with some of these amazing ladies that are here today that I'm so happy to see here. Let me move my face out of the way. So I like to start with this quote because it really is like a summary of my career, and I believe all of you can relate if you're an entrepreneur. So an entrepreneur tends to bite off a little bit more than she can chew, hoping she'll learn to chew it quickly, just as you go. It feels like a free fall sometimes. You just jump in, and that's really been my journey of even fundraising. I just knew that I had to do whatever I had to do to keep my business capitalized, and that means a lot of times thinking outside of the box. I want to give you a little bit of background on me first before I go into the presentation. In 2019, I became the first female founder, not just Black woman, but female founder to raise over $1 million in a crowdfunding offering. I did raise $1 million from VC and private accredited angels. Prior to that, I've raised over $250,000 by winning pitch competitions. I raised money from accelerator programs, including Techstars, and I've used my own money. I've bootstrapped, and I like to say I've raised money in every way but government grants. And my favorite way to date, other than free money and pitch competitions, has proved to be crowdfunding. So this is my last offering. I actually raised a total of $2.3 million in crowdfunding. I raised $1,070,000 last year, and then $1,050,000 this year because the legal limit is $1,070,000. So I just want you to feel comfortable that I know what I'm talking about, and I think I'm like one of the experts in this field. So I'm really happy to share this information with you all. Again, 2001, I made my free fall journey in entrepreneurship, and I'm on my 5th company. We just made a recent acquisition, which makes number 5. And I have 4 active businesses today that are still in business, and I raise money for all of those companies. So I want to give you some background on just crowdfunding, regulation around investment, so you can understand why it's so important that we're able to crowdfund. So after the 1929 stock market crash, a lot of people lost money, obviously, and people were it was a really bad time for the country, and many of that money was lost from making investments from people that are considered to be working class and everyday people. And so the SEC passed a law in 1933 saying, listen, if you're not accredited, you can't get in on early stage deals. You only can invest in companies that are already being publicly traded, but you can no longer invest in private companies and have the opportunity to make a high risk investment because you could possibly lose money, and we don't want people losing money. That was what they said, but it really created a gap further between the wealthy and the poor. So the SEC defines accredited investors to be a person with a net worth of $1 million, an individual who makes $200,000 a year or $300,000 as a couple for the past 2 years. And also banks, insurance companies, trusts, and brokers can be accredited investors. Only 10% of Americans are accredited investors. Put a snapshot here of some faces of, what the typical profile is. Of course, there's others. Of course, there are Black people that are accredited, but this is the face of the accredited investor. When I Googled top investors in America, these faces popped up, no Black faces popped up. And, you know, they say these people are expected to be knowledgeable. They don't need the SEC to protect them. They can make good financial decisions. The rest of us can't. So that means the 90% of Americans are left out of opportunities, the rest of us. And the belief is that, you know, if you're not accredited, if you're not a millionaire, you're just not smart enough to invest. You can't make good decisions about investing. You can't be a good steward of your own money. And so we're going to just leave you out of that and, you know, just stay in your lane. When it hits the stock market, you can invest after we've already got paid, and we're going to give you a chance to get whatever's left over. And so, you know, basically, if you can't participate in high risk investments that yield high returns, how can you really create wealth? I looked up, how are the people that are wealthy, how do they get their wealth? From investing and from inheritance. We all know that we, as Black people, were prevented from generating wealth, owning land for hundreds of years. So many of us don't have inheritance. Many of us are first generation, and we don't have trust funds, and we don't have things that get handed down to us. And if we can't invest in deals that will really allow us to get these high returns and change the trajectory of our family in a financial way, how will we ever get in the top 10%? It's impossible to get in the top 10% and to be wealthy if you don't have the opportunity to take these chances that they do. And so really, SEC said, if you're not wealthy, you can't get in, but until now. So the Jobs Act was passed in 2012 by the Obama administration. And basically what the Jobs Act said was a startup, a company can raise money from accredited and non-accredited investors. There's legal limits to that, up to $1,070,000 each year. But wow, like that changes the whole, the game changes, because now you can raise money from your family, your friends. People that no longer were able to invest in early stage companies can now invest, and anyone over 18 years old can invest. So this is the first time in history, really in history, because if you think back to 1929, Black people certainly were not being included in deals even back then. Even though legally we could, no one's calling up any Black people back then to say, hey, I have a great opportunity for you to invest in the company with the Rockefellers and the Rothschilds, and it wasn't happening. So this is the first time, and I'm not going to talk politics, but every time someone says Obama didn't do anything for Black people, I really want you to understand what this law did for Black people in our businesses and our ability to create and earn generational wealth. And so for the first time ever, we as founders can raise money from the public, and then we as people can invest. We can invest and we can build wealth. I like to call crowdfunding a micro angel investment. I don't know if I made the phrase up, but I feel like I did, so I'm going to claim that I did. And so micro angels to me are people that invest between $100 and $5,000, because anything above that, around 10,000 range, generally falls into the accredited investor category. There's the pros and cons. Of course, the pros, anyone can invest. You can source money from literally anybody over 18. This is globally as well. There are some countries that don't allow it, but overall right now I have investment from 42 states and 12 countries, and I have 4,800 investors. And the great thing about that is, another pro, it's one line item on my cap table. So I don't have a messy cap table, the capitalization table that lists all of your investors. My cap table has one line item that encompasses all the people that invested in that one round. So I don't have to deal with like talking to literally 4,800 people or listing out 4,800 people. It's global. Many times it's on your terms. So when you go out and raise venture capital, typically you're waiting for them to give you a term sheet, which a term sheet is them telling you what your company is worth and what they're going to give you for your company. And then you typically don't have a say so. Now, I negotiate. But a lot of founders just take what they can get. But this time it's on your terms. You can do the research, set your valuation. You don't have to give up board seats. You don't have to give out preferred shares. You can do common stock, and you can raise from as many people as you want. Also, you can do rev share or equity. So I chose to do an equity crowdfunding campaign But in some instances, if you want to do revenue share and repay that money in the form of dividends, you can do that. And then also, not on equity crowdfunding, but I'm speaking of just all crowdfunding in general. You can do pre-sales if you do something, if you use a tool like Kickstarter, where you can pre-sell a physical product and raise the money to produce that product. So crowdfunding is also equity crowdfunding, and then also you can do where you pre-sell. The cons are there are high fees associated with this. Many of the platforms take about 6% of your raise. There's also fees involved with due diligence. So I think between $5,000 and $10,000 in fees, which include bad actor checks, them taking the time to do thorough due diligence, just like you would do with the VC, where they're going through all of your documents line by line, asking tons of questions. It can be time consuming. And then I also put as a con and a pro, a revenue share could be a con because you would have to give up some of your profits and some of your cash. And a lot of times, we need that as early stage revenue companies. We need to keep in all the money that we get in order to continue operations. The network strength can be a con. If you're not someone with a very large network or capital to be able to advertise, it could hinder your ability to reach the volume of people that you need to have a high conversion for your offering. It's a numbers game. So I believe for our offering, our last offering, we raised $1,050,000 in 47 days. We had about 60,000 people come to our landing page, and only it converted to about 2,700. So you see those numbers. I mean, they come. It's so interesting because we had like 15,000 people click invest, and then they didn't make it past that. So you have to get as many people to your page so that you can get your conversion rate up. I just put here some of the more widely known crowdfunding or crowdsourcing platforms that you can take a look at, and they're all very different. They all have different requirements. Some do require revenue, and some will allow you to raise money as an early founder with no revenue, which my company, we were early revenue, so we wouldn't even have qualified for platforms like Republic that require you to have a $5,000 to $10,000 monthly recurring revenue before you can raise money. So they're all different. There are limitations, so it's not like free for everyone, but I do believe that these limitations will lift eventually. This legislation isn't even 10 years old. It hasn't even really been out since 2015. So we do have some time, but you're limited. So if you are a non-accredited investor, so 100,000 or below, you only can invest about 5% of your income. So they'll cap you. And I think that still plays into their belief that we're not educated enough. We, meaning anyone that's not accredited, not educated enough to make decisions. I don't think the government has the right to tell you how much of your money you can invest and how you have to live and what means you have to live within. But at this time, there are limitations. And actually, many of my investors reach out to me because they wanted to invest more than the limit. And they're asking us, well, can you let me invest more? And it's really an SEC law that we cannot get around. In general, crowdfunding, is set to reach $350 trillion by 2025. So more and more people are really taking advantage of this, especially now during COVID, which I'm going to go into some of the benefits of raising even now. For founders, it's an alternative to venture capital. It reduces your dilution, and you can scale at your own pace. A lot of times founders will raise millions of dollars. They'll really want you to move fast, burn quickly, get to market fast, even before you feel like you have a solid product market fit. So you're pushing to spend this money to get these results and returns that investors want you to get. And then you burn through your capital, and then you're really at the mercy of them. For investors, because I'm both a person that has crowdfunded, and I've invested in several crowdfunding campaigns myself as an investor. And so you can invest in a business that you never would have had the opportunity to get in ever. Investors, you can sell your shares. So there's a way to get liquidity. There's a way to get into a company and get out. And then, of course, the higher risk of getting in early, but you can recover that initial investment with profit. And if you hold on to it, and we all want to have a successful liquidity event, whether it's an IPO or an exit, but this is an opportunity for investors to get in early. And this reminds me of when I seen the numbers from the Uber IPO, and they were publishing, I don't know if it was true or false, but it was going around social media, and it was showing you all the different people that invested early in Uber. And there was one line that said someone invested $5,000 and they got a $25 million return when Uber IPO'd. And I said, well, if nobody asked me, I have $5,000 to invest, but the point is, look at the opportunities. So it is a numbers game. You have to invest in multiple companies. They won't all be a hit, but the opportunity, one big exit can change your life and your family's life. This is as a founder and investor. So who can raise money this way? Everyone, anyone, any of the founders that are on here today. I will say no revenue required in general, legally no revenue required, but some of the platforms have put things in place like Republic where they do require you to have revenue. So it's important to just vet the platforms and see what's best for you. My advice is if you're thinking about doing this, you must have your shit together. And that means do not think that because it's crowdfunding that you're not held to this a higher standard. You actually are. I think the process was much more difficult for me as far as due diligence wise to raise money in crowdfunding than it was to raise money from VC and from accredited angels. The SEC and the requirements of financial reviews, and I've had to go through a 3-year audit. It's really to protect the investors, but it does take a long time, and it's very helpful if you have your due diligence data room organized from day one. So here's a great website resource that I've found that can give you an idea of what documents you need to have prepared for your due diligence data room. I don't think you should wait until you want to raise money to do this. When you start your business from day one, just start your data room. Just start it even today. If you don't have it, start today. Start tomorrow, Monday. Put your data room together so that anytime someone asks an investor or you want to raise money crowdfunding or raise money in any way, let me see your due diligence. Here it is. It's in the cloud. It's in Google Drive, Dropbox, Box. There's many clouds that you can put your information in, keep it organized. And literally every month I drop my financials in there. Every contract we signed, they also went through my financials line by line. They were asking me questions about individual transactions from 2017. And it's so important to keep your receipts and your invoices because they will go back and say, what was this $5,000 for? And I'm like, this was 3 years ago. So it's important for you to keep very detailed and accurate records of everything you do with the money that you have coming in and out. I want to say that COVID does present one of the best opportunities to crowdfund because the SEC has relaxed some of the rules around launching a crowdfunding campaign. So when I launched my first campaign, I had to have a financial review done. I mean, to be transparent, we were in a dire financial situation. We didn't even have the money to do this, to pay someone to review our finances. We needed to raise money to keep going, but it actually costs money to crowdfund. But now with COVID, SEC allows you to self-certify, meaning you can say my financials are accurate. You can self-certify without a CPA, and you can raise up to, I believe, $250,000 without having a CPA certified. What this allows you to do is get out there and start raising money. Take the money that you raise to then go back, get your certification, get your financial review done by the CPA, and then extend your campaign to legal limit of $1,070,000. You don't have to wait until everything is done, which I had to wait 7 months. And, literally my business could have died waiting to be able to raise money. So luckily these laws have changed. And there's also a lot more acceptance and visibility. And the great thing is you can raise money from your couch. Just up and even until last year, we had to make the rounds to raise money, do face-to-face meetings and all of this outreach. And so now no one expects you to make the rounds. You can do things virtually now. You can do your meetings in, your previously done in-person meetings. And so it's just a really great time to build relationships virtually, save money on travel, save money on buying dinners, etc., and really get out there and start to raise money. And there's a lot of other benefits to just getting out there now. And I will say it's interesting. I wasn't sure how people would respond to me raising money in March when the lockdown first happened. But what ended up happening was people had a lot more disposable income. Those that had income still Many people, despite the hardships, many people are still doing well in this climate. And those stimulus checks, I believe I got a lot of those stimulus checks. People took their stimulus checks and they invested it in many ways, which I'm so proud of us for doing that. Many of my investors had never invested in anything ever before. No stock market, no companies. And now, even the shift of mindset that people say, I'm going to take this stimulus check, I'm not going to blow it, I'm going to invest in my future. So I really encourage everyone to go deeper into this. At this time, I'll take some questions. I think I'm making good time. If anyone has questions, I'm really happy to answer them. I'm looking to find the chat. I've used Zoom all the time and I'm still not good at it. It's very ridiculous. I cannot find the chat box. Let's see. Does anyone have a question? Am I missing any questions, Crystal? I don't see the chat. Maybe I can't see it because, oh, there it is.
Yeah, you see it now?
Now I see it. I used some of my stimulus check. Hey, thanks, Anthony. That's amazing. I'm committed to building an equity crowdfunding platform. It's really, Talisha, it's so important. I talk about this all the time because I think it's really important for there to be a Black or brown person start our crowdfunding campaign. Of all the platforms that I shared, none of them are Black owned. None of them are Black managed, and I don't even see any Black people on their team. And so even though we're getting an opportunity to raise money, we don't control it. And still, other people outside of our community are benefiting from us. So for me raising $2.3 million, I can just estimate I gave Start Engine about $250,000. I can just estimate. So they're making money off me. I would love to have been able to give that money back to a Black-owned platform. Now, it does take time to do that and build that to get your broker-dealer license, but please do that. Someone said, Candace said, what was the most challenging aspect to starting your campaign? The challenging part was the due diligence process and how long it took. And since I was very early in doing raising a secure token offering and doing equity crowdfunding offering, the laws were changing constantly. The law changed 3 times in the middle of me filing for my doing my filing with the SEC. So I had to keep going back and refiling, re-EDGARizing, getting my financials updated. It was very difficult to keep up with legislation, and it's still changing now all the time. Just during COVID, the law changed where, I forgot to mention this, that the legal limit to raise money is going from $1,070,000 in a Reg CF to $5 million. They anticipate this to come into effect by the end of this year, which is a blessing because I could have kept raising money. I had to stop at $1 million. I was oversubscribed. I currently have $400,000 on my wait list. So this is another, just the laws is the most challenging part. The question, what advice do you have more mompreneurs with a new LLC? So you have a new business. The advice is, I would just say, this is kind of overall, and I hope I'm not being too vague, but I'm not really clear if you want to elaborate, but I would say have your business very organized, structured correctly. You have your LLC, so make sure you have your EIN, make sure you have, you have your intellectual property assignment agreements, your employment agreements, make sure your company is set up in a way that you can scale your business. Look at it as, you all have a big corporation. You just are small now. So everything you do from the beginning of your business, look at it as a big corporation. I have culture books. I have employee manuals. It was only me. I was the only employee, but I put everything in place that I've seen exist in corporate America, which allowed me to scale my business more quickly. Is there a place to get your slides of the recording of this event? I wouldn't know about the recording, but if anyone would like to, not my slides. I'm going to post the link here in our chat where you can read a lot of information, which is basically my slides in a much more detailed format on my Medium blog, medium.com/Dawn Dixon. There it is. And I have this presentation in words, very, very spelled out for you. So please check that out. What are some resources that you recommend we do more research on crowdfunding? So let me scroll my slide up. Here we go. You can go to my Medium that I shared. I also have an online a course launching in October, crowdcoach.co. And then I do one-on-one coaching on Super Peer. but please read my Medium. I've put a lot of resources out there for free. There is tons of resources on my Medium about crowdfunding. And then also for Crowd Coach, we do webinars for free. So you can get free information before you decide you want to join the course. On average, how much equity did you give up for the money you raised? So it's up to you how much equity that you give up. So I have a 25 million valuation. I raised 5 million. So that is basically, what is that? 20%. And that's on par with typical tech raises. Every type of company is a different type of structure, but I still own over 40% of my company at this time. I mean, dilution happens as you raise more capital, but also as you grow, the value of those shares increases. So it's really finding a balance between what are you willing to give up, what is the value going to be, and how soon do you give up a larger chunk of your business if you want to get those that money to really push you forward. I don't recommend taking large checks until you have a clear product market fit, path to profitability, and understand how you're going to make the value of your company increase. What are my thoughts about working with the SBA? It says, what businesses do you think will do best for equity crowdfunding? I've seen everyone from organic products, as far as body products, smoothies. Businesses work best when you have an audience of people that will believe in it and invest. That's any business. I think that anyone can have a captive audience and invest. My thoughts about working with the SBA, I won the SBA Innovator second place in that competition. That was nice. I won some money. The SBA has great programs like SCORE, which is free resources for entrepreneurs, Bixel Exchange, but I've never been approved for any type of SBA loan before the PPP. So I don't have much experience, but I did get the PPP. So that was nice. I think I'm done. I think my time is up right now. I don't see any more questions, but I encourage you, if you do have some questions, definitely reach out to me if you want to talk to me one-on-one, shoot me a message on LinkedIn, and then you can always book more time with me. But I certainly appreciate you all. Thank you for taking your Saturday morning to just continue to level yourself up. This is the perfect time to be doing that. And everyone have a wonderful rest of your day.
Thank you, Dawn.
Bye.
Bye-bye. Thanks, Dawn. Exceptional. She is, now you see why she's referred to as the queen of crowdfunding.